I am still on the road here this week, and they're cutting down trees out here, I think, so you have to excuse the noise. We have spent the better part of the past 2-3 weeks or so preparing clients for the month of October. What does that mean? Well, the month of October, historically speaking, tends to see at least one spike in volatility in risk assets. So for the stock market specifically, that means there tends to be a bit of pressure on the stock market. Some Octobers it's more than others, but it is a strong possibility that seasonal pattern really is what it comes down to. The VIX, which represents implied volatility on the broader equity markets, large cap equity markets, does tend to see a spike in itself. So there's many different ways we can actually take advantage of this. But before we look at it, I've created a very simple, but I think a very telling chart on the VIX so you guys can see this. I will say that this October we tend to have another little an additional sprinkle of uncertainty, and quite frankly, every year that is the case. It's just this year, since it's front and center, we do have the U.S.-China trade talks apparently getting back underway, and I think that's going to potentially cause a lot of headline risk. Then we have, of course, the earnings season coming up as well, Brexit still ongoing, and about 3-4 other factors. And on top of that, the global economic growth continues to get worse. So at the very least, I think this is an opportunity to protect yourself. So how do you do this? Well, there's many different ways. You can just take down your gross exposure, meaning you can reduce some stocks you own. You can buy puts, which is a simple thing to do. Puts are still very cheap. In fact, I think too cheap, considering where we're going into the month of October. You can do put spreads. You can just short the S&P 500. So let me just first quickly show you this chart so you guys can see this a little bit better. So this is the chart of the VIX, and essentially this is nothing more than a 3-year look back, and you guys can see that the red parts here is the month of October. So there's a little spike here in 2017 in October, but there still was a spike. Then we had a spike, of course, last October, last year, 2018, was rather meaningful. And so the question I ponder is whether we're going to see it again this year. Again, I'm not saying this has to be higher than the spike in last year, but considering, and we could go back many more years and you'd see the same pattern. I just want to show you the last couple of years. The question is, how do we prepare for this? So I think, to be honest with you, to keep it really, really simple for most people, this probably just means buying some protection in the S&P 500. Personally, the trade that I've done is I have bought some November 300 strike puts, and we sold against that at 290 strike puts using November SPY options, the monthly options. This is not a recommendation. This is I'm just telling you this is what I did. And I think for the most part that does actually make a lot of sense to do, without having to kind of reconstruct your entire portfolio. Although I will say we are very late cycle in this market, and I do think generally cutting down gross exposure has been, and we've been telling clients for the past year and a half, has been the prudent thing to do. And so I continue to operate within that. But from a trading perspective, I guess it's really more the point here. I think it's probably a little bit reckless, for the lack of a better term, to go into October not at least being somewhat hedged, particularly with the VIX, which I just showed you. The VIX currently, as I'm recording this here today, on the 26th of September, the VIX currently still being around 16, 17, which I think heading into the month of October is just a little bit, given the uncertainty out there, I think is just too low. So that would be what I did. Take that into consideration for what it's worth. I hope this is helpful, and we have a very special webinar coming out tonight for what I consider to be the best trend following trade that we've seen in a long time, particularly because it's not in equities. So I would encourage you to join that webinar. Thursday, 26th of September. There's a link down below, or if you're watching this through an email, there's a link in there as well. But join me for that. It's a very special presentation, something that you probably haven't thought of. And I think it's not only an amazing profit opportunity, but also an opportunity to really hedge your portfolio and, quite frankly, potentially your retirement. So we'll see you guys there. In the meantime, have a great day. If you like this, give us a thumbs up, share the video, and thanks for watching.